Hello everyone, welcome to the Ichimoku charts.com daily analysis for wheat for Wednesday, May 8th, 2013. Well, a change of trend today in a candle that's made a higher high and a higher low. Previous day's trading we had a downtrend in place and we had the market breaking out down below the bottom of the cloud. Previously it was trading within the cloud and the market found resistance within the cloud and an area extending up to around the 740 level, and the sellers came in backing this market quite strongly to close the market down below the bottom of the cloud for a bearish signal. The only problem with that bearish signal was that the round number 700 level of support was down around that level. And for the three past consecutive trading days, we've seen the market test to around that level and be rejected from there. And for today's trading, we've seen that happen as well. We've seen the market close at the midpoint level, which suggests that neither the buyers nor the sellers have control. So for the two trading periods ago, the sellers had strong control. They lost commitment at 700. Then the sellers traded down through the 700 level. The buyers came back in and the buyers won control of the market. Today we've tested to 700 and the market has closed at the midpoint level with neither side in control. This is the second consecutive spinning top type candle, so candle of indecision. So it does raise doubt about the direction of the market in terms of supply and demand. Neither the bulls nor the bears have taken control of this market in terms of overall supply and demand, and we've seen price rejection from the 700 level, but also we've seen rejection from the Tenkan-sen, the green line here. That's at roughly around the 713 area. So that will be very strong resistance for this market for the next few days trading. Now also in terms of resistance, three trading periods ago we saw this window open up, and here we saw the gap down, and we have a gap between the low and of the candle of the 3rd of May and the candle of the 6th of May, the high of the candle of the 6th of May, and that's in candlestick terms what we call a window, and it has potential to offer itself as very, very strong resistance to this market. So if we do see this market trade up, not only does it have to interact with the Tenkan-sen, which will offer itself as resistance, but also with the window. And that also coincides with that previous strong resistance level at 716, which then became support for this market. So very, very solid resistance around that area, near 716 and just below, extending roughly from about 716.5 down to about 715. So very, very strong resistance overhead. So now we have a market that's basically congesting over these three previous days with strong resistance overhead and strong support down below around the 700 level. Now in terms of the Fibonacci extension, and we're examining the relationship of this new first time frame uptrend to the previous time the market's trending up, and here today with this indecisive spinning top type candle we've seen the market rejected from the 23.6% level, and that could be very important. We haven't seen the buyers take control of this market. They actually had control for the previous candle that set the market up for the potential change of trend. We've seen the change of trend, but it's no longer supported by the buyers. By the same token, the sellers aren't strong either, but the story here is about a loss of control by the buyers. So there is potential for a change of trend. We do need to watch for a lower high and lower low. The only problem is though that we have the cloud just below where the market's trading here around that 700 level, and that will be very, very solid support and be a very solid barrier to this market trading higher. Now also with the Fibonacci retracement, and here a very important interaction with the 38.2% level. And here today we saw the market trade exactly to that 38.2% level around 713 and be strongly rejected from there. So this also has set the market up for a potential change of trend. And if we look at how the market's trading at the moment, and this candle is currently developing, it is black, it is bearish, and it looks as though the market is going to test down to these levels around the bottom of the cloud or down to around the 700 level once again. Now in terms of Ichimoku, obviously a neutral market in big picture terms. We saw the market trading below the cloud for some time, tested to within the cloud held it as resistance. The price action was rejected from there in a strongly bearish manner, but the market found support around the 700 level, and now we're back trading within the cloud, so a neutral market in big picture terms with the bottom of the cloud around 700 holding as very strong support. In terms of the Kijun-sen, the pink line here, the market has closed for this candle that has been completed trading. It has closed just at the Kijun-sen, so giving us a neutral market in the medium-term time frame. So we're a neutral market in the long-term time frame, we're a neutral market in the medium-term time frame, and we're just bearish in the short-term time frame by trading below the Tenkan-sen, the green line here. And that Tenkan-sen has acted as resistance to this market, but by the same token, the Kijun-sen, the pink line, has acted as support as well. So a very, very indecisive market at the moment in all time frames. If we do see a bearish breakout down below this 700, there is potential for the market to trade lower, but we do have strong support extending roughly down from about the 690 level down around to the 683.75 or around to the 680 level, and then below there the next area of potential support is at the 660 level. But we really do need to wait until this market makes its mind up. Strong resistance overhead, but very, very solid support down below.